Hello and welcome to another episode of the 239 Real Estate Roundtable podcast. I'm your host, Kevin Tremmel. I'm a local real estate agent here in Southwest Florida. And today we are diving into a question that is on many people's minds these days. Should you buy now or wait to buy a home in 2025? We'll explore things like current market trends. We'll also discuss long-term benefits of home ownership to help you make an informed decision. So let's dive in. First, let's talk about the housing market, where it currently stands here in the beginning of 2025. So as of early 2025, the housing market is showing signs of stabilization. According to Zillow, home values are projected to grow by 2.6% this year, indicating a modest but steady appreciation. In terms of sales, Zillow forecasts 4.3 million existing home sales in 2025, which is a slight increase from the 4 million that were expected in 2024. And this uptick just suggests a gradually recovering market. More options for buyer, more inventory, things like that, more sellers willing to sell their home. Mortgage rates obviously remain a critical factor. So while they have been elevated, there's some optimism about them potentially easing. The National Association of Realtors anticipates higher home sales and moderating mortgage rates in 2025 and 2026, which would obviously make purchasing more accessible. We've already seen the Federal Reserve lower their target interest rate. And even though mortgage rates do not follow the Federal Reserve's rate one-to-one, there's hope for a trend to continue down with mortgage rates as well. So before we answer the question of whether or not it is a good time to buy right now in 2025, I think it's important to talk about the long-term benefits of home ownership. So first up, we obviously have one of the biggest ones, which is building equity. So owning a home allows you to build equity over time. As you pay down your mortgage and your property's value appreciates, your stake in the property's value increases, contributing to your overall net worth. Owning a home is historically one of the biggest wealth builders for the average American family. Another benefit is the financial stability. So nowadays, most mortgages are fixed rate mortgages, which provide predictable monthly payments, shielding you from the uncertainty of raising rents. Usually, in most situations, leases are always 1 year, and after that year, more often than not, your landlord will raise your rent. And so this stability can really aid you in long-term financial planning. One of the third benefits is tax advantages. So homeowners benefit from tax deductions such as mortgage interest and property taxes, which can lead to significant tax savings every year. It's obviously advisable to consult with a tax professional to kind of understand how this works, but this is a very common method on how homeowners save on taxes every year. Number 4 is the appreciation potential. So even if the home does not gain any value, you will still build equity because you're paying off that mortgage every month. But the biggest component on how it will contribute to your net worth is the appreciation of the home. So historically, real estate has shown really long-term and stable growth in value, serving as an amazing hedge against inflation. So census data indicates that the median price of a home jumped from only $172,000 in Q4 of 2000 to $417,000 in Q4 of 2023. And then lastly, the last benefit of owning a home is beyond financial benefits. It kind of a sense of stability and pride. You have the freedom to customize your space, fostering a deeper connection to your home and also your community. So is now a good time to buy a house in 2025? My answer would be it depends. It depends on your time horizon. So just like with really any investments, for example, the stock market, the longer your investment horizon is, the less likely it is for you to lose money on said investment. So for me, that breaking point is really 3 years. So if you know that you are getting transferred in 18 months or in 24 months, or if you know that you are going to have a child and you will have to upgrade in the next 36 months. Or vice versa, if your children are leaving the house and you will have to downgrade or that, or you're getting relocated for a job opportunity in a different city. If your time horizon is less than 3 years, I think it could really make sense for you to look at some other options like renting. Unless you have reason to believe that in your city or in your area prices are just going to go through the roof, then that's a different story. But if your time horizon is longer than 3 years, if you stay in this house, 8 years, 5 years or longer, I think real estate and buying a house in this year will give you a great opportunity. And I want to illustrate this by looking at two graphs. Okay, first I want to look at is the 30-year fixed rate mortgage average in the United States. This data is from the St. Louis Federal Reserve. They put out some great data, and this shows us the monthly average mortgage rate for a 30-year fixed loan dating from May of 1971 all the way to today. And I think it's important when people talk about mortgage rates to put it in the bigger picture, right? So this line right here, this very faint red line that you see here, is actually the average. So when you take all these data and you average them over the last 50 years, the average is actually 7.7. So as you can see here on the hand side, we are actually below average right now, believe it or not. Of course, when you look at the last 10 years or so, 15 years, yes, we are definitely in a high rate environment, but if you compare it to the 90s, we're actually not even that high. Now, where it gets tricky for most buyers is these higher rates, and then in conjunction with very high home prices, right? So that's kind of where it comes in. But what I want you to know is that we are still below average rates over the last 55 years, and if the rates do go down, you always have the option to refinance. You're not stuck into your loan for the next 30 years. You can always refinance it into a lower loan. So there's a saying that's getting floated around right now, which is marry the house and date the rate. If the rates drop in 12 months, 24 months, great, refinance the loan, but at least you're getting a good deal on your house, which brings me to the next I want to go over with. So this shows the median sales price of houses sold for the United States, going back all the way to the 70s. I know you can't see that right now, but and then going today. So a couple things I want to talk about here is the fact is that based on this data, real estate tends to always go up in the long term. Okay, even if bought, this is the 08-09 housing or economic crash. Even if you've bought Q1 of 2007, which was the height of that run, even if you would have bought there, which ultimately would have been a very bad time to buy, but even if you would have bought there, today you're you're at 400, you're at 250 here, you're still up by $170,000, and this is obviously median prices. So what I would really think about is the bigger picture, long term, and just the overall long term appreciation of real estate. Okay, so when when I hear people like saying, oh yeah, I'm just gonna for the crash, and prices are obviously gonna be like how they were in 2010. We're talking going from 419 to 200, which is a 50% drop. And let me tell you, if that were to happen, the world, right? This isn't that is likely to happen, because even in the biggest crash we've seen, we went from 257 to 208, which is about a 20% drop, give or take. So let's go into some more recent times here. It does seem like the housing market is stabilizing and correcting a little bit, which, like I said, I think is a great opportunity for most buyers to jump in because rates are high, which in turn demand is low, which then in turn gives sellers more time on market, more competition, things like that. So I've seen great deals that can be negotiated with sellers. So like I said, I think now's a great time to buy. So there you have it. That is my answer for whether it is a good time to buy a house in 2025 or not. I know it's not as clear cut as most people might like, but I really believe that real estate is really individual. Okay, so I want you to consider the following things before buying a home. Number one is your financial readiness. So you have to assess your financial situation, including your credit score, savings for a down payment, and also your readiness for ongoing maintenance costs of this home. Second thing you have to consider is your local market conditions. So while the market is stabilizing, it's essential to consider local market conditions as they can vary significantly, and any good real estate professional can help you answer those questions. And the third thing to consider is your long-term plans. So really consider how long do you plan to stay in this home. If the answer is less than 3 years, I think different options can make sense. If the answer is more than 3 years, I think 2025 is a great window of opportunity for most buyers to purchase a home. Real estate, just like really any other investment, is generally a long-term investment, and short-term ownership may not yield the same benefits. So deciding on whether to buy a home now or wait depends on your personal circumstances and long-term goals. So while the 2025 housing market does show signs of stability and offers several long-term benefits, it's crucial to ensure that home ownership aligns with your personal situation and your life plans. Thank you for joining us on the 239 Real Estate Roundtable. If you have any questions or a topic you'd like us to cover in the future episodes, please leave a comment down below. Also, don't forget to subscribe and hit the bell to stay updated on our latest content. Until next time, and happy house hunting.